Hello and welcome. My name is Fournier. I'm the Executive Vice President of the Oakville Chamber of Commerce. Throughout the pandemic, we have made it our goal to ensure our members receive up-to-date information on government communications, support programs, and restrictions that affect your business. And it's with this goal in mind that we are pleased to welcome tax experts Bianca and Melisa from Tino-Gaetani Carusi. They are going to give us an overview of important considerations as we approach tax time. It's tax time, there's no escaping it. After a short presentation, I will moderate a Q&A based on my own experience of navigating the government programs, as well as questions and feedback we've received from our membership and members at large. We understand what a challenging time it is in our business community, and we share in that challenge. I know you will find value in today's presentation. If there is any support that we can be to you or your business, please do not hesitate to reach out to us at info@oakvillechamber.com. And without further ado, I'd like to welcome Bianca and Melisa Gaetani.
Hello, everyone. Hope everyone is doing okay in this wonderful COVID era we're living in. Melisa and I are going to tag team today and see if we can impart a little bit of our knowledge with respect to various government incentives and grants and loans that are available. They change on a regular basis, so it's been a bit of a race trying to keep track of them and what's going on. So here we go. We're going to cover the most used ones, I guess, and then we'll be ready for questions later on.
All right, then it's my turn in this tag team. So one of the things, the firm's always been founded on crisis brings opportunity, and COVID-19 has allowed us some opportunity to help our clients and some crisis in trying to find out what all these incentives are given the constant shifting landscape. So I'm going to put up a document that summarizes some of the most popular business subsidies and incentives. You'll get a copy of this if you want it, so I'm not going to put it up the entire presentation, but it's just some framework here. So the subsidy programs for businesses have really been divided into three big tranches: helping with wages and payroll, businesses' big expenses; helping with rent, again, the other big expense usually of businesses; and then operating loans to help with kind of everything else. And so we're going to talk to those three categories of incentives here and try our best to cover what we can, because these have been complicated. So I'm going to start with the wage subsidies. There's been two subsidies that have come out to help businesses keep employees employed rather than having them collect CERB and all the fun that that's been. So they have been the temporary wage subsidy and the Canada Emergency Wage Subsidy, the SUs. Now, the TWS, the temporary wage subsidy, did not have any test associated with it. You could just take 10% of a payroll reduction basically, and up to 25,000 for every employer, and there were maximums for every employee as well. This TWS program requires a form called a PD-27 that needs to be filed. That is how the government's going to match what you put on your T4s versus what you remitted in payroll withholdings. So that form is super important to submit. Most people have taken this wage subsidy, the TWS, at the beginning of the pandemic in March when it came out, but you need to make sure you submit that PD-27 form. The second form of payroll assistance has been the ever so popular SUs or Qs or whatever version of pronunciation you want on this. So this one's complicated. The spreadsheets are pretty gross that the government has put out in order to calculate it, but you can think of this subsidy as a first 5-period chunk and then a second 5-period chunk. So up until the end of July, really, the calculation was in or out. So if you dropped 30% in revenue, you got the subsidy. If you didn't drop 30% in revenue, you didn't get the subsidy. Some complications in terms of what periods you can compare to, but that was a bright line test and that deadline's over now for application. It was January 31st. So what came after that was if you've experienced any drop in revenue, then you're entitled to some form of this subsidy. And so the amount is different depending on the month and the revenue decline. But the point of this program is if employers are going to keep employees employed, then, to use that word a million times, then the government's going to subsidize those wages if the employer has experienced a revenue drop. So that program has been extended a couple of times, is now extended up to June 2021. So it's an ongoing program. Again, since we're in T4 season here, the T4s are due at the end of February. It's very important to note that there's new boxes on those T4s where you basically have to report each employee's wages in each of these subsidy periods. The government has essentially said that they're trying to wrap up a whole bunch of other audits in order to deploy resources to monitoring all of these subsidy applications. So one of the ways they're doing that is getting the employers to feed them information on employee wages during the various subsidy periods. So it's a disclosure on the T4s, but it's an important disclosure to make. All right, over to Bianca for the operating loans.
All right, the first one I'm going to talk to is what we refer to as the SBA loan, which is the Canada Emergency Business Account Loan, so SBA for short. This loan has been rolled out in 2 tranches. The first tranche was $40,000, which was available up to the end of September. And since then, the government has enhanced it with an additional $20,000, so that in total it's a $60,000 loan that is available. The loan is a interest-free loan, which is always advantageous, especially in these times. So it's interest-free for 2 years, as long as it's repaid by December 2022. And when you do repay it in December of 2022, you can keep 20 of the 60,000 as a grant. So you don't have to repay the full 60, you'd only have to repay 40. So in summary, it's an interest-free loan for 2 years, of which $20,000 is a grant. Thing to keep in mind here is that the $20,000 that you hold on to will be taxed. So it's not completely $20,000, but at small business rates of 12.5% or so, that's still a fair amount of money that you can continue to use in your operations. If by chance you cannot repay it by December 2022, then it can convert into a loan. It will have an interest rate attached to it, and it will be repayable over a few years after that. But to the extent possible, it would be great to be able to repay it by the due date and therefore take advantage of the $20,000 of grant. The deadline for the application is now March 31st, 2021. So if you haven't been able to apply it, if you have not been able to apply for it, there's still time to apply. And in order to qualify for application, you need to have had payroll of at least $20,000 in the previous year prior to March 2020. Or alternatively, if you don't have that payroll, then as long as you have what's referred to as non-deferrable expenses, so expenses that you have to pay, you cannot defer them, of at least $40,000, then that would qualify. So things like rent, things like cost of sales, expenses that businesses have to incur. So as long as you meet one of those 2 criteria, then you should be able to apply. The application process is very easy. You just go onto your financial institution website. So if you're with TD or CIBC or any of the banks, you can go onto their website and they'll take you through the application process. If you meet the criteria for payroll, it's easy. You just put in your T4 numbers. It actually tells you what you need. You can apply for it right away. If you don't have the payroll amount and you need to deal with expenses, it's a little bit more onerous because you have to provide the invoices to support the non-deferrable expenses. In any case, if you qualify, certainly worth taking advantage of. And I'll talk to a second program after you've had your chance to talk about the rent subsidies, Melisa.
Okay, excellent. So the other big expense a lot of small businesses have is rent. And so there's been two versions of this rent subsidy program as well. We're not going to talk about the CECRA, SECRA first version because that one's over too. The problem with that first rent subsidy version though, was that the government put the onus on the landlords to do all the work on the application. So the landlords had to do all of the submission and they had to give up 25% of their rent. So they weren't keen to do it. And therefore that program was highly underutilized. The government then came back and said, okay, we're going to try and make this, we're going to try and make a better version of this. And so they came out with what's called the Canada Emergency Rent Subsidy, CERS. And so CERS, the good thing about it is the calculation for the revenue drop, which again is the bar for the subsidy amount, is the same as it is for the wage subsidy. So you do that convoluted calculation one time and you can use it across two different subsidies. What the CERS subsidy also brought that the first version, the SECRA, didn't, is that you can throw in some other expenses, property tax, utilities, things like that. So it's not just rent necessarily, depending on what the rental agreement says. But to note, the rent has to be paid to third parties. Whereas if you had rent being paid in a related party situation under the SECRA, you could claim the subsidy there, but you cannot do that for CERS. So again, revenue is the criteria for this to get into this subsidy, but the application process is the same. You can apply through the CRA website, you can use their calculators. I encourage you to use their calculators. I've done 2 audits on these subsidies now, and if you can hand CRA their own calculation with your numbers, that'll go so much easier than something they may or may not be familiar with. All right, so that's the rent subsidy. Bianca, hot off the press, there's a new loan, so she wants to talk about this for a moment.
Yes, the next loan I want to talk about is what we refer to as the Hascap Loan, and Hascap stands for Highly Affected Sectors Credit Availability Program. That's a mouthful for a loan. But that program was announced as part of the fall economic statement, and the applications for it are now available. Now, this loan is administered through the BDC, the Business Development Bank of Canada, and it allows businesses that have experienced drops in revenue of 50% or more to be able to take loans ranging from $25,000 to $1 million. If you have multiple companies in your corporate group, the aggregate amount of the loan could be as high as $6.25 million. So again, you need to have had a revenue drop of 50% or more. You need to be based in Canada. You need to be a Canadian business. You would have had to be financially stable before COVID hit. And the rate on the loan is 4%. There's a 10-year repayment period. And there's a 12-month postponement of the first payment. So lots of incentive there if in fact revenues have dropped and you need some funding to keep things going. So it is a relatively new program, so I'm sure it'll continue to change as we explore new applications and so on. But keep that in mind if your business has been heavily hit because of COVID. So Melissa, I think we also had, CRA has some great resources online. Do you want to talk about that for a second?
Sure. So the CRA, the Government of Canada website, has a lot of links such as, do I qualify for incentive? So you can actually go through a checklist, put in some information, and they can tell you some of the government programs that might be available to your business. They also, at the program level, have very detailed who qualifies, what's the eligibility, what are the dates, here are some templates sometimes to help you with the calculation. So I would go to those websites for sure if you're doing the calculation yourself, to take a look there, because they're pretty powerful resources. So I think Franz has some fun questions for us, so excited to dive into that.
Thank you so much, Melissa and Bianca. Lots of information. As you were speaking, questions were coming to mind. And I'm going to ask one right off the bat. It's not even in my script, but as an employer, you mentioned the T4. And as a chamber, we have qualified for Qs. We have applied for Qs, but we also have a payroll provider who have issued the T4s. So do I have to go back to our payroll provider, or have they taken care of that already?
I'm going to say that like 99% of payroll providers will have done this already. You're looking for boxes 57 to 60 on the bottom of the T4. So just check if they're there, but I assume they would be.
Okay, that's great information. Thank you. So now, building off your presentation, we talk to dozens of members a day. We've taken it on as a team that we are going to speak to all of our members as much as possible. And when I have been speaking to members, one of the things I always ask them, have you taken advantage of any of the government supports? And I often get, and this surprises me, but it shouldn't, because small business owners sometimes you're running your business and that's what you're concentrating on. But they tell me, oh, I'm letting my accountant take care of that. So running an accounting firm, what are some of the questions that you want your clients to ask of you?
I'll start, Melissa, and you feel free to jump in with any comments you may have. So I think relationships are very important. Client-accountant relationships, just as they are with any supplier or any customer. So I would like to think that when my clients are doing anything that is different or are unsure about what they're doing, that they would pick up the phone and say, or send a quick email and say, listen, I'm buying this property, any thoughts? And that will normally allow us to give them any input that we might have. In the case of these government incentive programs, if the businesses are doing well, they're making money, and we often hear about the tragic cases through COVID, but there are many, many businesses that are doing well. I think of distribution, I think of IT, I think of communication support. There's many businesses that are doing well. So obviously they're out of the incentive programs, they don't need them. But anyone who is not necessarily struggling, but not doing what they expected to be doing this year, it wouldn't hurt to ask, look, my business is down 10%. Is there anything available to me? It's not consistently down. There's some months that I'm down, some months that I'm doing better than before. Is there anything there? And many people have tried to navigate through the CRA websites and try to understand what applies to them, what doesn't. We're all in this race together. We're all trying to do that, but I think we have a few more tools in our toolkit that allows us to be able to find some of those items quicker, or some of that information, we're able to wade through it. So I would say what I'd like our clients to do is be able to say, pick up the phone, here's my circumstances, is it under control? Do I need to do anything? And if the accountant, it's a busy time of the year, so depending on clients and where people are, you're not always thinking of everyone every day. So a little bit of a nudge can help sort of think about that particular business and what can be done with it.
Yeah, absolutely. You know, from the Chamber's point of view, as I mentioned, we have taken advantage of the WAVE subsidy. Without the option of putting events on, our revenue has been drastically affected. And, you know, I didn't quite understand that change from the 30% drop in revenue to that sliding scale. And it was only about a month ago that I went back into the CRA website, had a really close look, and then went, oh my gosh, we actually qualify, you know, for periods that I didn't think we did qualify. So, you know, really good advice to pick up the phone, or, you know, if you can do it yourself, go back on the CRA website. It is actually quite helpful. What other support programs have had changes that you would like to highlight for business owners?
Yeah, so isn't that the question for the day?
Yeah.
Let's reframe of which ones haven't had any changes, and maybe my answer will be a lot faster. What this really boils down to is that the government's learning like we are. So the tax regime like this, one of these programs usually takes 12 to 18 months to roll out as it passes through the whole process and gets all its criticism. These programs have been rolled out, like announced and then rolled out within a week or 2 weeks or a few days of each other. So we all have to know going into this, there's going to be problems, and it's in the spirit of trying to get money in Canadians' hands, which the intention is usually right. So a lot of them have been changing, and a lot of them have missed the mark on businesses that should be getting support, but don't fit into these technicality buckets. And we've had a lot of problems with that, with clients being like, this isn't fair. And I mean, we agree. So there's a couple of things. One, you can call into CRA and tell them the inequities in these programs, and they are apparently keeping track of that. There's also been like the CPA Ontario, et cetera, is working with the government on a lot of these things. So the short story is these programs are all under revision on a regular basis. That's why they usually only say for the next 2 or 3 months, it's like this, and then we're going to release a new version of this. So, I mean, I'm sure most accounting firms are doing this. We certainly are. Every time there's a change, sending out an email to our client base outlining the change and saying, if you want us to help you with it, please schedule a call. We're also doing if a business calls in, we will do a full review on which subsidies or incentives you can and may not be available if our clients want that. So your accountant probably is, if we're not your accountant, your accountant probably is doing the same thing. So I'd reach out.
Yeah, that's great. Go ahead, Bianca.
I was just going to add, with respect to SUS, the new process of SUS, we've actually dedicated a person in the office to go through the intricacies of it, because it's not an easy calculation. There's quite a few complexities to it. And depending on the type of business, whether it's a restaurant, retail, whatever it happens to be, there's different nuances, union employees, non-union employees, all sorts of things. So we do have a full-time person that's dedicated to doing the SUS applications in the office. But as Melisa said, these programs are constantly changing. Even the SBA Loan was a change. It wasn't expected, the additional 20,000 tranche that was introduced in the fall. So it's just being able to keep your ear to the ground and seeing what might impact you.
Absolutely. And, you know, we are also tracking feedback from our members, and we are regularly in touch with both our provincial and our federal representatives here in Oakville and providing that feedback to them. They have been extremely responsive. They want to know what's happening on the ground. And truly, there have been there are a lot of people that are struggling, but there has been a really good sense of community, of helping each other. So I want to go back, Melisa, you mentioned about, showing the CRA calculation on their form. And I'm a rule follower, and I've been very careful to keep track of exactly what program we've applied for, have all my information ready. How long do I need to keep this information?
So we're recommending 7 years.
Okay.
I wouldn't do anything any different than how you're doing it for any other part of your business. We are all in the same uncharted waters of, usually I can give advice based on experience I've had. I have no idea what these audits are going to look like outside of the 2 that I've done, and they certainly haven't been pervasive. So I keep as much as you can for as long as you can right now for a 7-year period until we're told otherwise.
Good to know. Now,
Roz, again, I'll interject if I may.
yeah.
The other thing that would be valuable for people to know is that CRA has made a concerted effort to have their auditors wrap up any audits that they were working on that were not COVID-related audits, in the interest of being able to audit the COVID programs, the incentive programs that have been put out by the government. So I think we'll see a lot of audit activity in that area. So having your documents together and ready to present, the better you can do that, the easier the audit will go.
Good. And I'm glad that I have kept my CRA calculations for the Qs on file. Tax time is coming up from a personal point of view. Our staff have been working from home since March 2020, killing it, by the way. So they're going to have opportunity to claim some expenses on their own personal returns. So can you give me a quick understanding of what our responsibility is as an employer and what information we need to provide them?
Sure. So recently there's been a personal tax discussion on how employees are going to get credit for working from home, basically. So there's 2 buckets to this discussion. One is the employers have to do nothing if the employees choose to. The criteria is you have to be working at home for 4 consecutive weeks. If that's the case, you can claim a deduction against your income for $2 a day up to 200 days. So it's basically a $400 deduction against your income. If the employees choose to do that, the employer does nothing. The other option is that the employers fill out what's called this form T-2200. That form has the employer say, okay, the employee had these specific expenses out of pocket for their employment. And in this case, it's usually work from home stuff. And so the employer signs off on that, and then their employees can deduct whatever is on that form against their income. Now, the employer bears more responsibility, obviously, if we go through option number 2. So we have come across employers that just put anything under the sun on these T-2200s. I would not recommend that. I would recommend taking a good hard look at what is reasonable and defendable to CRA before you sign off on anything as a business.
Okay, good. Thank you.
Franz, if I could add,
yeah, absolutely.
If the employee chooses the $2 a day for 200 days, then there's no documentation required. So for employees that may not have kept all of their utility bills and all of the receipts that would be required to support option 2, that might be an easier way to get the deduction.
To go ahead with it, yeah.
And from an employer perspective, I'm not sure that there is really anything you need to do, although we have seen some of our clients that have just done a quick 1-page saying, these are your 2 options and here you go, so that employees are informed of it.
Good. Well, if any of our staff at the Oakville Chamber are listening, these are your 2 options. Get me your form in if you need it signed. Oh, well, thank you so much. We're just going to wrap it up. As we talked about, lots of changes. Things are fluid. Last year, there were extension to tax dates and so on. So are we still looking at an April 30th deadline?
We better be.
Yeah.
We honestly, as of right now, February 4th at 3:47 p.m., yes, we are still looking at an April 30th tax deadline. And for the sanity of all accountants out there. We certainly hope it stays like that.
All right, we're going to wrap up with that. Melisa and Bianca, you are both great supporters of our community, supporters of the chamber. Melisa just off from a win at the Oakville Awards for Business Excellence this past spring. So thank you so much for taking the time out to talk to us today, to talk to me. And, you know, you've given me some food for thought of other things. You know, people sometimes ask me, what is it you do at the chamber? I always reply, I keep the lights on. So making sure that our T's are crossed and our I's are dotted. Thanks so much, everyone, for joining in today. Thanks again, Melisa and Bianca. Take care. Be safe. Bye-bye.
Thank you. Bye.